Before I even think about entering a trade, I don't look for entries. I asked one question: what is price trying to do? So here's my process. First thing first, as I said earlier, what is price trying to do? Which means that I want to understand the story that price is trying to tell me, right? So firstly, I want to zoom to a more higher time frame for me to see a bigger picture of what price is doing, right? So my highest time frame on my time frame bar is 3 months, but I don't want to complicate things for you guys, so I'll be using the weekly time frame instead. So let's zoom down to the weekly time frame and see how it goes. So on the weekly time frame, without doing much, I just want to see if price sweeps the previous week high or low. I don't want to zoom out and be like, okay, price is bearish, so I should be looking for only sales or high. No. So as you can see, at this particular low right here that I marked as X, let me draw it so you can see it. You can see this low here. I marked it as X, which means a sweep of liquidity, right? So price swept that week's low. So and it will reverse, right? It is going to reverse. So I want to have my confirmation before going long. So I'm done with that weekly time frame. It's not for entries, it's not for anything. I'm done. So let's zoom down to the daily. So now on the daily time frame, we can see clearly, right? We can see clearly what price is doing. Price is bullish. And is it in a range? No. Is it bearish? No. It is bullish. I'm done with there. So now I want to understand what the step 2 is. Where is price likely moving? Right? Where is price likely moving to? I want to understand where it is going. So on the daily time frame, I don't usually do much. When price, let's say it's going up, how I call this move, I have already explained it in my previous video. So this is not me explaining that video. Instead, let me just explain this present trade for you guys so that I will be very open and transparent as possible. So first thing first, on the daily time frame, we can all see that price was creating big momentum candles on the buy side, right? You can see. Look at this buy side delivery. The expansion to this upside. This red eclipse that I marked, if you look closely at this range, you can see that all the whole 4 candles, 1, 2, 3, 4 is just bullish, right? There's no bearish candle on the daily time frame. That is trying to tell you that buy side momentum is stronger, right? Now, how will I enter a trade? We all can see that on the new daily time frame, right? The previous week body, which is the low or high, not the week, more accurately, the body, right? I am just going to mark it out with this stuff you can see. I'm just going to mark it out. I have different entry model, but this one particularly is for this trade, so I'm going to share it with you guys. So this is what we call this, I think, an OCL or something, right? An OCL. So I just mark it. I want to see what this new day candle, right, come down to this zone before I'm going to look for my entry. So as I marked it, I went down to a lower time frame to have my confluences then before initiating a buy. This trade is currently live, so after the trade I am going to also drop a video about that, right? I'm going to also drop a video about that. So look at this red line that I draw, right? You can see it clearly. So what did I notice? On the 4 hours time frame, still there is no any significant, no any significant range or structure that you'll be able to see price clearly in it. So I need to zoom down to a more lower time frame. So I zoom down to 1 hour because 1 hour time frame mostly correlates or balance with the 4 hours. I don't know how, but if you're a trader, you might understand this thing that I'm saying. So on the 1 hour time frame, I could see clearly that okay, we had a clear break of structure. Let me delete this. This is for me, this is not a break of structure, but this is confirmed break of structure, right? And if you look higher, let's say on a more higher time frame, if I go back to the 4 hours, so on the 4 hours, as I said, you can see clearly that we have a break of structure. You can see this structure was broken, right? This structure also was broken. You can call that a double break also, right? You can call it a double break also. So let me just delete this. Then let me go back to the 1 hour time frame as I was explaining. So we can see clearly that this is a what valid break of structure. What next do we want to spot is what liquidity. And why did I use this zone as my POI? That I am going to explain. So listen attentively to this video, right? So clearly now we can see that what we have a displacement right here. And this kind of trade is going to confuse most of you. You can see we have a strong displacement right here. Firstly, price swept liquidity. This right here is a sweep of liquidity, right? Before price expanded to the upside, you can see this expansion. Now, the trade was somehow like this. Let me use a path to draw it for you guys. And this type of trade usually, man, is really confusing. Let me just take that up. Okay, I wanted to draw more than that. And this type of trade is usually confusing. Most of you might use this zone as your entry. This zone, right, as your entry. And you'll be buying. Though this trade hasn't fully played out yet. But for me, my target is what? This liquidity that is here. Because I ain't targeting the external, right? I am not a market god or like a demigod. I'm just sharing my view with you guys. So clearly what I noticed was what we have a liquidity sweep which was at this particular zone, right? You can mark that as X. Then where did I notice my change of character? My change of character clearly is still at that particular zone, not like this zone, not this zone. Let me show you, not this zone. You can see, because this did not break structure, this did not break this previous structure. Look at the structure I was expecting price to break if I am going to use that zone. What is this thing? This structure right here. So what led to the break of structure is not this first zone that led to that break of structure. It is this next one. Now this type of trade will be very confusing. As I said, it is this one, because if you see clearly, this expansion is what broke what that structure. You can see. So let me remove. So why did I use it as POI when I have multiple POI? There's a POI here, right, without liquidity, and there's a POI here also. Why did I use this extreme one instead of this closed one? Okay, firstly, now we all can see clearly that there's no significant liquidity at this first POI, at this range. Now you can see there's no significant liquidity, right? Price just went up, right? Look at the expansion, the delivery, you can see, then just went back straight. This is an aggressive move. We call this an aggressive move. In forex, we have what? Impulse or aggressive move, and also a corrective move, right? An impulse move or aggressive move just goes up without even like pullback or something. It just goes up. It might be due to maybe news impact also, right? That is what leads to what an impulse move. Why a corrective move somehow like this? It's like, for instance, this is a high, right, and a low. This is a higher high, and it corrects itself, right? It doesn't just move up, boom, and maybe pull back a little, then go up again more, right? It doesn't just move like that. So if price is moving this type of way, we call this a corrective move. So let's get back to what I was explaining. Now, as you can see clearly in this move, right, clearly this is not a zone. So this is more like an inducement for me. I see it as an inducement. Here's inducement. Yeah, inducement. So where's my liquidity? This right here is my liquidity. Right, these two zones is my liquidity. So I am expecting price at least to pull back to this zone, mitigate on this trade, which it has already did, right? Mitigated me. I am not looking for much in this trade. It is 1:6 also, I believe. is 1:6. So my stop loss was just below this low, this first low, not this extreme one. But where I'm supposed to put my stop loss more accurately is this extreme one, but I did not use that one. I used this closed one, right? I used this closed one instead. So I just set my stop loss just below it a little. Then my take profit is around this zone, right? My take profit is around that zone, and this is my entry. You can see, and this is my entry. So you can see 6 ratio what? I mean 6.13, which is 1:6. That is just how this trade. And currently I'm on either 1:2 point something also, but I don't know. So what I'm trying to explain for you guys in this trade is simple, right? It's simple. How did I and why did I use that zone? Again, let me still break it down now with this real chart example. Firstly, if I want to take a trade, right, or maybe use a particular zone, I want to see what liquidity, right? Because price moves was to collect liquidity before what going to the main direction of the market. So clearly I could identify liquidity on this trend. Secondly, now I want to see my point of interest, right? Like it is being caused by a strong displacement, by a strong move upward. I want to see what like an imbalance for price to come back to fill that balance. And if you look at this on a higher time frame, let's say the 4 hours now, you are going to see the gap clearly. Let me expand this on the 4 hours. You are going to see the gap clearly. The gap between this black candle, between this black candle and these other ones, right? The gap between it, some of you called out fair value gap, imbalance, inefficiency, right? This gap, I want to see price come back to fill it, right? So clearly we can see a gap, and this is a displacement. This right here is a displacement, and that is what happened. So how did I spot it? I started with the higher time frame, right? Then scaling down. That is how I got the entry. So we are still on higher time frame. Let me go to the 15 minutes, then show you how I refined my entry, because I cannot use a more bigger stop loss. If not, I won't be able to catch a 1:6 trade, which it hasn't yet happened yet, right? It's still on. This trade is still on, but currently I set it to risk free. Yeah, so I'm risk free on this trade. So my stop loss is more like here. Come in, let me delete this and set it more like here, right? As I'm doing this video at the moment, because we still have zones below. So this is the point of interest that I used, right? On the 15-minute time frame, we all can see clearly the order block, right? It might be small, and you might feel that, okay, why didn't I just mark everything together, put the highs and the low and everything, right? I do have my reasons for that. So this is my order block. The order block that I used to create what these to enter this particular trade. If you notice, price almost tapped me out. It went like straight down to my stop loss. It might just take maybe like a pip, or not even up to a pip, for it to take me out on this trade. So let's just see how it goes and all of that. So this is my liquidity. You can see the liquidity clearly. Yeah. Then this right here is the target, not external target, just close liquidity, right? And internal liquidity, more accurately. So that's it for this trade. Thank you guys. If there is anyone to understand, the comment section is open for you, and you can drop the next topics that you want me to on. So you can do me well